Hello, guys, and welcome to the 12th episode of the Market at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, Happy New Year. This is the first episode that we are doing this year. So, we'll be looking at what's happening in the markets currently, what we expect this week, and hopefully just to provide value for everyone. So, hello, Charles, and welcome to the session. Hello, Susan. Thank you for joining us. So let's get this started. There's quite a number of things that are currently happening in the markets. So I'll try to tackle each and every one of them. And once we get this, then it will become easier to identify opportunities in the market. So there's quite a lot of stuff happening. So the one main thing that I would like to begin by highlighting is the strength of the dollar since the opening of the markets. So remember, yesterday, during the New Year was a public holiday, so there was no trading, the markets were closed, today the markets are open, and there's a lot of activity happening. Remember, we had a series of bank holidays happening through the Christmas week, all the way to the New Year, and now that the markets have resumed, we are seeing a lot of activity happening, and this is creating a lot of opportunities. So first things first, the US dollar index is up 1.27% on its first day of trading in 2023. So it has rallied from 103.2 to the current level of 4.54, presenting a strong start to the US dollar as banks resumed business following a series of bank holidays during the festivities. So the Euro USD and the Pound USD pairs took the limelight as they broke lower on strong momentum and trading volume. So as you can see from the charts, very strong momentum here happening in the US dollar index. So this strong spike represents a very strong start to the year. So perhaps we could be seeing some further hawkishness in the Fed, and this basically implies hiking interest rates higher, and this is expected to strengthen the dollar going forward. So there's a lot of bets happening in the markets right now, and some of these bets are majorly buying the dollar against the currencies. So if you look at Euro USD, it was on a strong bullish momentum for quite a period of time. And this is through September, October, November, December. But since hitting this high, we are seeing a very strong bearish momentum. So if I just do a clean chart here, you can see we had a very clean double top formation. So this is the first day where the high of 1.073. And now another test here on the last trading day of the year. And now a strong momentum indicator of the last 2 weeks. So last week, the low was around here. The other week, the low was around here. Now we are headed even lower. So it indicates a very strong dominance of the dollar, and perhaps these will continue throughout the month. So a very strong support was identified here around 1.0575 in Euro USD. The market cruised through, no problems. Seems to be putting that back for a while. There's a good chance we'll be seeing some further downside momentum where the dollar keeps strengthening against other currencies. So look at the pound, same thing. The market was actually moving sideways for a couple of days here. Moved down lower and then sideways, holding a very strong support. So the support level was around, check quickly. So support level at 1.2 flat. So since then, the market broke strongly, going down lower before changing direction in the last couple of hours. So the last 2 hours were quite strong, but the pound started to recover against the dollar. This current hour seems to be continuing higher. So perhaps we'll be seeing the market retest this strong level of around 1.2. However, the sentiment basically indicates that we'll be having a potential bearish momentum, indicating a strong dollar against other currencies. So that's one of the things that have been happening in the markets today. So we'll be expecting some further strength of the dollar. So two, the economic calendar is jam-packed during the first week of trading. So the OPEC is holding its first meeting of the year today, all day. And the proceedings of this meeting are expected to provide an outlook for oil supply in the first quarter of this year and perhaps for the entire year. So investors will be watching the meeting for signs of further tightening of the oil supply. So we know that the policy of the OPEC Plus countries have been tightening supply in order to maintain higher prices. However, we have seen oil prices experience a strong bearish momentum in the second half of the year, where they basically dropped all the way towards the beginning of the year. And now we'll be expecting the OPEC to make a decision. So at the end of the meeting, we'll be following up closely to try and get hints of whether oil continues to be dominant this year or whether it continues losing value this year. So as you can see from the daily chart, at the beginning of the year, it was trading at 78.23, and this Brent oil rallied all the way up. Then from here, this is the point at which Russia invaded Ukraine. So price kept going up, rallied all the way up, and it hit a high of $131.18 per barrel. So since then, the market pulled back down, moved sideways for a while, and then somewhere in March, President Biden perhaps strategic oil reserve. So this is when he would draw oil from the US reserve in order to complement supply in the market and drive prices lower. So since then, there was some rally that happened around April, May, and you can see since then there's been more pressure to push oil prices downwards. The Nord Stream pipeline was bombed around this area in September, and then OPEC responded by cutting output by 2 million barrels per day, which drove oil prices higher period for continuing to push further down. So we go to the bottom of the price at the beginning of the year. Price did March 1 at $35.37, marking the December. So if you look at the weekly chart, you can see we have had 3 consecutive weeks where UK oil was rallying, and now this week seems to be having a confused signal, where at the beginning of the day, oil prices were moving up, then they move back downwards, and this is the current price level. So the proceedings from the OPEC Plus meeting is expected to shed some light on the outlook for oil this year. However, in the short run, it seems like a nice bull run to consider. We might want to think about the key levels in the oil prices here, where there is a seemingly short-term bullish momentum, where the market is forming higher highs. We compare this high following this other week's high and this high, they keep on getting higher, and today we have already printed a higher high in oil prices. So on the lower side, if you look at this low compared to this low and this other low, then you can clearly see that on the forward chart, we have some bullish momentum going on in UK Brent oil. So some further upside is expected. Maybe you could potentially pull back and rally. So we can also price in the issue where the dollar was very strong, strengthening against other assets. So in this case, it was also strengthening against the UK Brent oil. So this could explain the sharp downfall here. But now we're experiencing some further upside. So perhaps there's an opportunity to see oil move back to the previous high that we saw early this morning. And this is at a price level of around 86.75. So that's it for oil. And we'll be expecting more on the meeting. So hopefully I'll be able to share the link. So let's go forward. The minutes of the Federal Open Market Committee or FOMC meeting are expected on Wednesday, that's tomorrow. And this is a detailed account of the December FOMC meeting, and it may give more hints about how hawkish the Fed will be in the first quarter of 2023. So a more hawkish Fed could fuel the dollar's rally. So we'll be focusing on these meetings, meeting minutes tomorrow. So if there's more content indicating that the Fed is a little bit more hawkish than expected, then we'll be looking at a much stronger dollar and weaker equities. So that's one key thing to consider going forward this week. So the US economy showed strong resilience in December, and this trend is expected to continue. Given that it is the first week of the month, we anticipate US non-farm payrolls data on Friday. So don't forget about the jobs data. This is the first Friday of the month, first week of the month. So on Friday, we always expect the non-farm payrolls data. So alongside the non-farm payrolls data, we also expect jobs data from Canada. So while the US announced its jobs data, the Canadian economy also does the same. So if there's a divergence between the two, then the USD Canadian dollar pair can be a very nice pair to trade, especially if you enjoy high volatility environments. So in the previous reading, we saw 263K jobs in November. So in December in December data, we expect 200K jobs to have been created in the US. So another key thing to consider is that during the festive season, there's usually a series of hiring, especially in the retail sector. So in this case, we would be seeing a spike in jobs in the US in December, and these would give the Fed more leeway to hike interest rates further and strengthen the dollar, whereas on the other side, the equities will be weakening as a result of the lower liquidity in the market. So I anticipate a strong job support because December typically sees a surge in hirings, which eventually gives the Fed more leeway to hike rates or basically continue the quantitative tightening spree that has been going on the entire 2022. So global equities closed last week, marking the worst performance since 2008. So the S&P 500 index fell 19.4%. This is the worst performance since 2008. So it's a bad bear market, especially if you're on the wrong side of the market. So for the tech survey, Nasdaq index fell 33%. Out of tech sector is currently down. We have seen a lot of stocks going down, with Tesla being down 69% from the year open. So the Dow Jones was more resilient. Remember, it is dominated by industrial companies. So it fell about 9% a year. So the result of this drop in equities was as a result of quite a number of factors. One is the removal of COVID-related quantitative easing. So a lot of stimulus packages and money that was being printed and pumped into the economies was removed. So last year there was no such thing, and this caused the bear market to start. So there's also the issue of slowing global economic activity in 2022. So this also contributed to the bear market. In addition to this, it was a high inflation environment, so people are spending more money towards their basic needs, food, energy bills, rent, and all that. And in that case, they wanted less money to invest in stocks, or as well as to purchase discretionary products. So in this case, it heightened or strengthened the bear market. So there's also a number of more factors that contributed to this. One of them is rising interest rates. For instance, we saw US interest rates rise from 0.25% 4.50% towards the end of the year. And this rising of interest rates basically pulled liquidity of the markets, thereby leading to the bear market. So more factors contributing to the same is the energy squeeze. Energy prices were really high last year, and this contributed to the bear market. And lastly, the Russia-Ukraine war or conflict, which basically led to more uncertainties in the market. Investors were not very confident investing in a couple of major equities. This led to the bear market. So towards the end of the year, we were expecting what we call the Santa Claus rally, where the markets tend to rally for the last 7 days, last 5 days of the year, and 2 trading days of January. So we didn't have Santa Claus rally. The market basically moved sideways. There was not much activity during this festive season. And now we have already entered the first day of trading. So perhaps we'll be seeing some positive momentum happening. This week, first and second day of trading will be today and tomorrow. So hopefully we get to see some upside from this. So this week we may see hints of equity rotation as investors shift their portfolios, more resilient sectors in order to offset the high interest rate environment and a looming economic recession. So going forward, I think the talk of the year will be about an economic recession. We know that inflation has already peaked, especially in the US at 9.1%, has been dropping for the last couple of months. In the previous reading, it was 7.1%. So with this in mind, we expect that the Fed will continue hiking interest rates until inflation drops to a target level of 2%. And this is expected to weaken the US economy, eventually leading it into a recession. So with the talk of recession being on the books, then investors might be expected to do more rotation of their stock holdings, hold stocks that may do well during a recession environment, and release stocks that may not do well in the recession environment. So some of the stocks sectors to consider would be consumer defensives. We will be looking at healthcare and so on. So the idea is to look at companies that might do well in this environment. Some of the companies that might do this would be, let's say, the financial sector. Banks and other financial institutions might be able to make some good profit when interest rates are moving higher. At the same time, it's also important to note that for goods, especially in the healthcare sector, you literally buy them whether the economy is good or bad. So you don't buy healthcare products when you want them. You only buy when you need them, and when you need healthcare, you still have to buy that. So at the same time, we might also look at some section in insurance where people will still pay for insurance, especially healthcare, despite the state of the economy. So those are some of the areas to look at, including utilities. You still pay for your water bills. You will still pay for your energy bills, regardless of the economic situation. So companies dealing with those sectors might be doing well going forward. So in addition to these, some of your favorite stocks that tend to have an alpha or perform relatively better than the benchmark index, they have been seeing lower and lower valuations despite those companies remaining profitable. So with stocks like Tesla down 69% and a selection of other stocks being much lower, then this might be the year to start picking on those stocks that have much lower valuations that you can enjoy once the bottom is in. So the Fed raised rates by 50 basis points at its most recent meeting, totaling 425 basis points increase in 2022. So this has pushed US interest rates from to 4.5%, and the Fed has promised more hikes to combat high inflation, which, as I mentioned, was 7.1% in November. So this week, we'll be looking at a couple of more data points, including the job openings, also the ISM manufacturing PMI on Wednesday, as another data point to help forecast the Fed's next rate decision. So data indicating a strong US economy may be interpreted positively for the US dollar. One key concern, especially in the jobs data reading, will be on the wage rate. If we continue seeing strong wage rate growth, then that might be hampering Fed's decision. However, if wage starts to slow down, then that will be a moving the right direction. Then we'll be anticipating a bottom and perhaps a pivot in the near future. So that being mentioned, there's also more content to cover this week. One is about the earnings season. So we know that in the last 2 weeks, the earnings season was very cold or quiet. There was no much companies reporting earnings, but now that we're in the new year, we'll be expecting more and more companies to start reporting their quarter earnings. So this week, we'll be focusing on the retail sector. There's 3 basic companies in the retail sector that will be reporting their earnings. So we'll be following up on this, especially to see how much sales they made in November and December, and this could cause volatility in the individual stock tickers. So these companies are as follows. One, we have Bed Bath & Beyond, big company, also used to be a favorite for the Wall Street traders. So if you all remember the GameStop saga, one of the companies that managed to see multiple digit rise as a result of that was Bed Bath & Beyond. So looking at the financial position of the company and how much sales it made in the last 3 months. So besides this, we also be looking at Conagra brands as well as Constellation brands. So those 3 companies will be reporting this week. And once we see the earnings, perhaps we'll be able to take advantage of the volatility that comes as a result of the report. So that's it for today. I'll be looking at any questions if you have them and try to address those questions as we move forward with the presentation. So for gold traders, it was a good start for the year, moving up 1% on the first day of trading. So as you can see, the market opened here very early in the morning, went all the way up, basically gaining about 1.45% before erasing the gains as the dollar was strengthening. And now you can see that the gold is resuming strength. So there's more to the upside than the downside. We're still up 0.86%. So there's a good chance we'll be seeing some further upside in this one. So market opens here, rallies all the way up, goes back down, and now seems to be continuing. So there's a good chance we'll be seeing very strong gold going forward. So we already attempted to break the upper trend line of the 4-hour chart. So if you look at these as the rising wedge, you can already see that the market is attempting to break this level. So a break above this level here would basically see us continuing with the bullish momentum. Perhaps we'll be seeing the 1900 price level in the near future. So just mark very well. I want to show you where 1900 is of this particular chart. So 1900 is somewhere around here. So this is 1899 and 1802. So there's still some more room for upside, especially considering what has been happening in this chart. So I just want to remove these lines so it's clear for everyone. So a very strong bounce here, which seems like a triple bottom. So market bottoms the first time, second time and third time, and then followed by a strong rally all the way up, breaks 1725, goes up, pulls back, retests the area, and then moves all the way up, gets the previous high that we experienced in August, and then breaks that high and is headed higher. So the short-term target would be this particular high here. So this is a high that we last saw in the month of June. So last time we saw gold, this high was June last year. So now the market is attempting to push it higher. So there's that potential that we will be seeing the price of gold move to that particular high. So sorry for that. So we broke this particular resistance here. So there's that potential opportunity, and we could see the price move from the current level of 1838 to a high of 1877. So on the counter or on the lower side, see a pullback, a market attempting to pull back towards the lower side. So we have a short-term trend line for our chart. So see the price moving back down the lower trend line. So the target, if it happens to be a strong reversal at the current level, would see us watching for gold going back to the 1800 price level. So this is also in the books. The price could go back to 1800, but if this level is broken and price keeps going up, then we'll be seeing much higher prices. So that's our thing to consider. We might continue trading within the channel, but if price breaks to the upper side, then the target remains around 1877 and 1902 is still on the books. So just checking to see if there's any questions or comments. Hello, Met Boni, Pashege, thank you. Hello, Kafiro, thank you. Any liking on gold? I think I just mentioned that. Can you share the Zoom link in the YouTube chat, please? No, I can't share the Zoom link. No need to attend Zoom when you're already on YouTube live, and you can respond directly on the YouTube where we are recording this. So just in case you want to go back and rewatch the session, it will be available on the FXpressa YouTube channel. So nothing is better than this. I'm very happy. Thank you. Somehow I can't grab your name, but thank you. Thank you for the response. I always appreciate when you guys take your time to attend these sessions and also respond to questions and also participate in the sessions. So Bitcoin has been moving sideways for quite a period of time now. We had quite a nice bull run extending from November to December. Before we topped 18,382, price pulled all the way back down, formed a very nice bullish signal. So we had this particular pattern here, which is basically a pin bar. After this, price rallied for a while before started moving sideways. So in the last 2 weeks of December, Bitcoin has basically been moving sideways. So today opened with a nice gap towards the upper side, pulled back and then pushed back higher. So we'll be expecting some further upside in Bitcoin, especially considering that all the negative news that we're experiencing last year are starting to tone down. So unless something major happens going forward, then I'm going to Bitcoin. So there's a good chance that it will be the bottom. Remember, we have been here sideways for quite a period of time. So since June last year, Bitcoin has been moving sideways with the bottom around 17,490 and 18,382. Before we saw this break happening in November, the price dropped all the way to 15,127. Has been moving sideways, and this seems like a very strong support to start accumulating some. So there's a good potential that we're seeing a bull run happening in Bitcoin, especially in this first quarter of this year. So besides this, nothing much to see here. If you look at the forward chart in the Nasdaq, still trying to recover from the recent sell-off. You can see the end of last year was some strong reversal, but this week the opening market opened high, went down, and seems like a big signal. So if you look at the S&P 500, a lot of sideways momentum. So we can say it's a majorly bullish or bearish. So perhaps a key thing to do would be to map this area, then look for a potential breakout. So from the 1 hour chart, seems like a sideways momentum, and nothing much is happening here. So So any break above or below might be the signal for a trading position. So thank you very much, guys. Thank you for your time and also your participation. I always enjoy holding these sessions. So we'll be continuing with this particular series, that is the Market Pulse series. However, Markets at a Glance series. However, for the Thursday series, we'll only be doing it in January. So as we get to February, we'll try to tweak it so that we add more value and provide you guys with content. So there's a good question here. Analysis of stocks, when it will be, it's something that we'll be actually considering. So as we hold our meetings, try to review the content for last year and how we proceed going forward, we'll be looking at how to incorporate analysis of stocks for this year. So thank you, Calvin Nyakundi. We'll be considering that. Another question from Duncan. For me, I don't understand the movement of the curves. When do I stop loss? When do I take profit? And how do I set the limits? So this is a really good question. It's something that we have already answered in the previous sessions. So I would recommend that you go through the beginner series that we did. It's called Novice Pro series. So I'll try and reach out, get to the first episode, and then share in the live comment section. So go through the 10 episodes and you will understand the basics of all these analyses and how you actually do it yourself. So I've shared the link, go through the series. Hopefully it gets to provide value to you. And then on proceeding sessions, it will be easier to understand the concepts as presented, as well as the analysis that I normally do on this series.